The number of people applying for mortgages increased for the second week in a row thanks to mortgage rates cooling off. Inflation has been cooling all year, and after last week's CPI report, it seems very likely that the Fed is going to be done with rate hikes. We'll discuss in a minute. Home prices are not dropping, and demand is slowly starting to increase again. If mortgage rates continue down, demand and prices will continue up even in a winter market. In fact, the average sales price in Dallas County increased by 2.5% last month, even with rates as high as 8%. Where is the housing crash I keep hearing about? We're going to cover all of this and more so that you're fully equipped to navigate this crazy real estate market. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand is going to look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, and what's inventory looking like. And if you stick around until the end, it's my favorite part. It is a top 10 ranked chart of the top 10 both hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to move to the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is November 20th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here to get to the latest weekly market update. First up is market news. The October CPI report came out last week, and it has been great news for mortgage rates. What we learned is that inflation is continuing to cool quickly, which means the Fed's rate hikes are working as intended, and it's very unlikely we're going to see any more rate hikes from here. How did the market react to this? Well, you can see right here, this huge candle down, that is the day the CPI report came out. And we basically just continued down throughout the week. We're trying to recover a little bit this week, but what this is telling you is that the bond market is betting that we're done with rate hikes, and this big candle is what you need to know. So the 10-year went straight down last week, and mortgage rates got all the way down as low as 7.36% as a result. What we learned is that overall inflation is down to just 3.2% in October. This is down from 3.7% in September. So inflation is dropping fast. If you'll remember, the Fed is trying to get to their target of 2%. And when you consider that we started back in June of 22 as high as 9%, you can see that we're almost there. And you may not know this, but the majority of the remaining inflation is all from the shelter component, which is the housing market. If you were to remove the shelter component of inflation today, we would already be well below 2% inflation. So it's important to see that in this report, the shelter component increased more slowly than the previous month at 0.3% compared to the previous month increase of 0.6%. So shelter inflation is still up 6.7%, but it's the first time it's been below 7% in an entire year. So this is the chart of the shelter component of inflation. And you can see we got way up here in the 8s, and we're dropping straight down to 6.73. But all you need to see from this is we're clearly trending in the right direction at a good rate. So what all of this CPI report is telling the Fed is that right where rates are at, everything is cooling off nicely, and there's no need to hike rates any further. For this reason, I believe that the worst of these high rates are behind us. Now, what you need to consider is if mortgage rates do continue down, you can expect demand is going to come back into the market, and all of the opportunity you have right now is going to be gone. This will include those big new construction builder incentives. And if you're one of the people who has been saying prices have to come down and the market is going to crash, it's still not showing in the data, and it's getting less and less likely every single day. Looking at the actual data, last month not only were rates as high as 8%, but demand is also naturally dropping this time of year just due to seasonality. So we probably had our lowest demand month to date. Yet the average price of homes sold here in Dallas County increased by 2.5% month over month and are up 6.9% year over year. With the lowest demand ever, prices are continuing up. Where is the housing crash? GDP is going up, inflation is going down, housing prices are going up even with record low demand, and crazy high mortgage rates. And if you're one of the few thinking that there's some huge wave of foreclosures coming, just look at this chart. This is nothing like what we had back here. Look at the foreclosures even as far back as 03 and 04. They were way up here, and of course when we got up to 08, look how high they got. But this was normal back then because lending standards were so low. It was so easy. They were handing out mortgages. You could just say what income you had. You didn't even have to prove your income, and they would give you a mortgage. That's what all of this was. This is what led to the big housing crash. Look where we are today. The number of foreclosures is actually declining. What do you think it would take for us to get from here with tight lending standards like we have now all the way up to here, which was an actual housing crash? And also, if you're just believing, well, these high rates are going to lead us into a recession, well, then you need to know Recession does not equal a housing crisis. Look at this. In 1, 2, 3, 4 of the last 6 recessions, this one, of course, being the financial housing crisis. Other than that, there was only one recession where prices came down 1.9%, and that was in 1991. You have a better chance of prices increasing around 6% than you do of them dropping at all in a recession. These are just the facts. If you're considering buying a home anytime soon, I've developed a new tool that is going to be a huge benefit to you, and I'm giving it to you completely for free. This is the Max Affordability Calculator. All you have to do is input your income, your co-borrower's income, both of your fixed debts, double check that this is accurate, and it's going to very quickly and easily get you in the ballpark of how much home you can afford with today's interest rates based on your preferred financial comfort level. And you can see we have 5 options to choose from, and these are going to be based off the percentage of your net income that you're willing to do. And this is more comprehensive than anything else I've seen out there, and it takes into account everything all the way down to your income tax bracket. And again, I'm giving this to you completely for free, so please take advantage of it. If you want to learn more about this, I've done a very detailed walkthrough video that you can check out next here. Okay, moving on, looking at national housing inventory. It looked like last week was potentially going to be the seasonal peak for the year because we had an increase of only 59 homes in the entire country. But this week, we had another increase of 2,957 homes. So it's still a very small increase nationally, and things are slowing, but we haven't hit the peak yet. For context, you can compare this to 2 weeks ago, where we had an increase of 4,326 homes. So we're definitely slowing, just haven't hit the peak yet. However, one piece of great news is we officially have more homes on the market today than we did a year ago by 327 homes. Today we have 569,898 homes on the market, whereas this day last year we had 569,571 homes. So it may not seem like much, but you've got to start somewhere. Now let's take a look at new listings. So still great news on the new listing front. Every week we have about the same number of homes coming on the market as we did back in 2022, a little less than 2021. But that's totally fine because the fact that we got to 8% mortgage rates meant that we very well could have just dropped off here as less and less people would list their homes, because remember, everyone who's listing their home is committing to buying at these high interest rates. So as rates go higher, there's a higher chance that less people are going to list, because most people who list their homes are not looking to become renters. So this is great news. For home buyers, it means inventory is back on track even with these high rates. And we're hoping to end the year, of course, ideal would be above these 21 and 22 levels, but even just with rates where they are, just to get anywhere near here would be a great end of the year for us. And what you need to know is just every single week from here until the end of the year, you're gonna have less and less homes to choose from. So if there's a home you like right now, please don't wait thinking a better home is gonna come on, because you'll have less options to choose from for the rest of the year. Okay, the last thing we're covering nationally is the percentage of homes having price decreases. As you can see, we're well below where we were a year ago. 39% of homes in the country are having price decreases every week. This is down from 43% last year, and we'll look at the local markets here in a minute. So 4% less homes are having price decreases than what we saw last year. Okay, moving on to mortgage rates. As you can see, we started the week at a 7.58. We got our good news, got as low as 7.36, ended the week at 7.37, which is where we start for this week. This makes 29 consecutive weeks now for rates around or above 7%. I say this number every week because it's important for you to understand how buyers are adjusting to these higher rates. For more than half of the year, we've been around 7%. So now to be at 7.4% may seem crazy high to you, but you've got to understand most buyers in the market right now have never been quoted anything below a 7. Now, regarding mortgage purchase applications, we saw another 3% increase after seeing a 3% increase last week. That's 2 consecutive weeks of what we would say is demand increasing, because the number of people applying for mortgages is increasing. And this also doesn't factor in the buyers who had previously been pre-approved, who stepped out of the market at 8%, that are going to be stepping back in now that we have no way to track, because rates are dropping around to where they would have been approved before when they were ready to buy. This increase makes a total of 20 positive, 23 negative, and 1 completely neutral print for this year regarding mortgage purchase applications. And if you think just because rates are up near 7.5% that you can't afford a house, I promise you can. There are still plenty of ways to get your monthly payment down to an affordable range, and I made a detailed video on it that you can check out here. So before you lose hope, make sure and watch this video. Now let's run through the MLS data. Starting with Dallas County, we had 269 closed sales in the last week. That's 43 more than last week. 247 homes went under contract. That's 5 more than the previous week. 376 homes listed. That's 118 less than the previous week. Of the homes that closed, 67 of them were immediate sales, meaning they contracted within the first week. In total, there are 1,872 homes either under contract or in pending status. That's 4 less than last week. Moving on to Collin County, we had 200 closed sales this week. That's 31 more than last week. 125 homes went under contract. That's 1 less than last week. 261 new listings, 7 less than last week. Of the homes that closed, 42 were immediate sales, meaning they contracted within the first week. That's 8 more than the previous week. And in total, there are 1,402 homes either under contract or in pending status. That's 17 less than the previous week. So you'll notice a lot more closings, a lot fewer listings in Dallas, and about the same number of homes going under contract this week. Okay, let's move on to the housing data. Let's start with Dallas County, and if you've ever seen my videos, you know what I use is called the Market Action Index. It takes all of this data, puts it into one easy graphic with a number. Anything a 30 or below is a buyer's market. Anything above a 30, we're asking how much of a seller's market are we in. We still only have a slight seller's advantage, though for the first time in a while, you can see that the Market Action Index is increasing. This is obviously due to mortgage rates coming down. Rates drop, the market heats up. It's that simple. We can see in Dallas, we had the median list price increase this week from $419,900 up to $425,000. Median days on market remains the same. The number of homes having price decreases came down a little bit as well to 45.76. Inventory, a small climb from last week. But let's look at the number of homes having price decreases. Compared to a year ago, all you really need to see is here in Dallas, about the same number of homes are having price decreases as were this time last year. And actually, we're at a 45.76. If we look back in 2019, the last normal market, we were actually at a 46.11. So more homes in 2019 were having price drops than they are currently. Now, moving on to Collin County, we see the same thing. Median list price has a small tick up. Days on market remains at a 42. Number of homes having price decreases, though this has been very low. It had a little increase, but you'll see on the chart, we're way below where we were last year. Inventory looks to be dropping again here in Collin County. A small drop, but what you need to know is Collin County has never had enough inventory. It was flat most of the year. It had a small run up here starting in October, and it looks to be declining again. And their market action index increased. You can see it rising up to 43.61. Again, market action index means things are heating up, which is very weird to see at the end of November. So it just shows you how big of a deal rates coming down are. And the number of homes having price decreases, we're at 47.19, but a year ago we were at 55.9. So still way less homes having price decreases. If we look all the way back to 2019, it was 48.79. So we're still below where we were then. So all this to say, everything is looking totally normal. This is not a market crash type of scenario. Okay, now moving on to my favorite part of the video. This is the top 10 ranked charts of the hottest and coolest both cities and zip codes in Dallas and Collin counties. And this is using that market action index that we just looked at. So starting with the hottest cities, Carrollton and Coppell remain the top 2 spots. Duncanville heats up 2 spots. Louisville cools off 1, Irving cools off 1, Prosper heats up 1, Garland cools off 1, Saxe heats up 2, Plano cools off 1, and Grand Prairie jumps on at the number 10 spot and knocks off Richardson, which last week was at the number 9 spot. Then we like to zoom in on specific zip codes, and if you'll remember, a 30 or below is a buyer's market, so to be at almost a 62 is still a very hot market. So the absolute hottest is Carrollton, 75010, then Duncanville, 75116, Irving, 75063, Dallas, 75249, Plano, 75075, Carrollton, 75006, Louisville, 75077, Garland, 75041, Coppell, 75019, and Frisco, 75035. Now we're moving on, the same thing, but for the coolest markets, we have Leonard, Texas remains the only buyer's market in all of Dallas and Collin counties because it's below a 30. Van Alstyne is right behind it at number 2, and it remains this week. Ferris cools off 1, Whitewright heats up 1, Salina cools off 1, Seagoville cools off 1, Sunnyvale heats up 2, Rockwall remains, Royce City cools off 1, and Anna, Texas jumps on to the list as the hottest city on the coolest cities list, and Farmersville falls off the list entirely. Now zooming into coolest zip codes, we have Leonard, 75425, Van Alstyne, 75495, Ferris, 75125, Whitewright, 75491, Dallas, 75220, Salina, 75009, Dallas, 75212, Dallas, 75219, Grand Prairie 75054, and Plano 75094. That's it for this week's video. Thank you so much for watching, and as always, if you're looking to buy or sell in the Dallas area, call, text, or shoot me an email. All that is in the description below. I would love to connect. Thank you for watching. I'll see you in the next video.